Hello everyone, John Flynn here from Flynn Real Estate in Niagara Falls, serving Southern Ontario, here to give you my honest and professional opinion about the Canadian real estate housing market. Today I'm going to talk about two main things, the CREA, Canadian Real Estate Association statistics release for April and how they played out, and my opinions in some things that I feel they forgot or should have included. And I'm going to go over some news headlines from today and compare them with news headlines from the end of January to February, just to see how they've changed and how the media's perception of the real estate market's changed. So the title on the CREA housing statistics, national statistics, home sales drop in April as mortgage rates shoot higher. All right, let's see what this is all about. So in the highlights, they have national home sales drop by 12.6% on a month-over-month basis in April. It's a pretty significant drop, 12.6% in 1 month. Actual, not seasonally adjusted monthly activity came in 25.7% below the monthly record set in 2021. The number of newly listed properties was down 2.2% month over month. The MLS home price index edged down 0.6% month over month, but was still up 23.8% year over year. And this is actually one of the things, they don't talk about average prices being up or down. They talk about their HPI, their home price index, which is a different way of, gauging the market. I like average because it's simple and it is a broad statistic, but the HPI is kind of like a made up system that they use, and it's hard to find out, what exactly they're using, and it's based on a benchmark price that was set at some point in time. So a little bit harder to understand, but it is still a indicator of the market. And lastly, the actual, not seasonally adjusted national average sale price posted a 7.4% year over year gain in April. So they're telling you the average sale price is up year over year, but I want to know today's trends. Is it up or down? Obviously it's down, but they don't tell you by how much. So I think they could have included that to be a little more clear on the monthly trend that's happening right now. But anyway, we're going to look at it because of course I figured that out. And also they get into home sales recorded over Canadian MLS systems dropped by 12.6% between March and April of 2022. The decline placed monthly activity at the lowest level since the summer of 2020. See chart A. So, and it says it was mostly led by GTA, simply because of its size. Sales were down in 80% of local markets, with other large markets posting double-digit month-over-month declines in April. The exceptions were Victoria, Montreal, and Halifax/Dartmouth, where sales edged up slightly. So there are some places that sales are up. Actually, I think I looked at Calgary, and I think their price was up. Their sales might be down, but their actual average price was up a bit. So we have mixed locations in Canada, or mixed housing conditions, but overall they're down. So here's a graph here that they posted. This is about monthly home sales. And what I found interesting was, and I have people ask about when I did my last one on the indicator, they talked about doing moving averages, and just to compile the data. It's a lot of work, but I might in the future. But they provide a 10-year monthly moving average, which is kind of interesting. And you'll see we're headed towards that. We're above it still, but we're headed very quickly towards that monthly moving average. I'm guessing we're going to get there in May, if not June. And then we'll be below it. And anyone that knows anything about basic stock market analysis knows that monthly averages or moving averages are a major indicator to be above or below based on trends and how trends are going to go. So let's keep an eye on that. We are headed towards it. We haven't reached it yet. This is a quote from, I believe, the chief economist, Sean Carthart from CREA, and the senior economist, I should say. It's interesting to read a couple of his quotes, and this is important. After 12 years of higher interest rates are just around the corner, here they are, said Sean. But it's less about what the Bank of Canada has done so far. It's about a pretty steep pace of continued tightening that markets expect to play out over the balance of the year, because that is already being factored into fixed mortgage rates. Of course, those have, for that very reason, been on the rise since the beginning of 2021. So why the market reaction now? It's likely because Typical discounted 5-year fixed rates have, in the space of a month, gone from the low of 3% range to the low of 4% range. The stress test is the higher of 5.25% or the contract rate plus 2%. For fixed borrowers, the stress test has just moved from 5.5% to the low 6% range, close to a 1% increase in a month. It won't take much more movement by the Bank of Canada for this to start to affect the variable space as well. So he's just saying like these mortgage rates and the stress test, that's changing because it's the higher. It's not the lower of the two, it's the higher. So buyers are now looking at 6%, 6 point something, 6.3, 6.4% to get qualified for a 4.3, 4.4% mortgage. So very important. This will affect borrowing costs. And I'm going to get into that in another video because I've been playing with some numbers just to see your monthly payments, because people don't care so much about prices. They want to know monthly payments. Right now, the price declines haven't even come close to the monthly payment increases. So we'll keep an eye on that, and I'll do another video on that at a different time. So I wanted to compare the April statistics with the March statistics, just to see, because they didn't really do a good comparison with prices and a few key indicators or a few statistics that I would like to see. So I'll put them up here together and we can look at them. So in March, the top one, national home sales fell by 5.4% month over month. And in April, 12.6%. So it's more than double. The sales have dropped off like twice as much as they have in March. The actual monthly activity came in at 16.3% below the all-time sales record set in March. And now we're at 25.7%. In March, we had the listings was down 5.5. They're only down 2.2. So supply is not really that much of an issue right now. The home price index rose in March 1%. In February, in April, it's down 0.6. And of course, the year over year in March was 27.1%, and now we're 23.8%. So it's still a big increase over last year, obviously. The actual national average sale price posted an 11.2% year over year gain in March, and it was 7.4% year over year in April, which I'm going to get into the actual decline from month to month in a minute, which again, this is one of those things statistics I believe they should have posted. So here's the average sale price in March this year. It was $796,000. And of course it was up 11.2% from the same month last year, whatever. But $796,000 was the price in March, the average national sale price in Canada. And in April, it was down to $746,000. So that's a 6.3% decrease in average sale price in 1 month. So that's a pretty significant number. I don't know why they didn't include that in their highlights or anywhere. They didn't actually state a percentage. They've just stated the price and compared it to year over year, which is important too. I understand that. But for a realistic current trend, we need to know this. In March, the sales to new listings ratio, it was about 75%. And of course, the long-term average is about 55%. But it was 75.3% in March. And in April, it's almost 10% lower. It's 66.5%. And it says it's its lowest level since June 2020. So we're heading back towards from a seller's market to a balanced market, they say. Which leads us to, in March, they declared about 2/3 of local markets were sellers markets based on the new sales to listings ratio being more than one standard deviation above the long-term mean for March 2022. The other third of local markets were in balanced territory. So 2/3 sellers, 1/3 balanced. Bring us to April, and a little more than half of local markets were balanced, and it talks about the ratios. A little less than half were in sellers market territory. So we went from 2/3 sellers to 1/3 balanced to just over a half balanced and less than a half sellers. So it's changed significantly the market dynamics then also. So I just wanted to again bring a little bit of perspective to these numbers, because if we look back at the highlights, they don't really put it into perspective. They talk about year over year, which again it's not that I'm saying it's not important, but I wanted to kind of bring it in a closer current trend way, and of course we saw that. Anyway, let's get into the news. And I want to go through 8 or 10 quick headlines from January, February at the height of the market, and then just compare them to now. These are from an assortment of different news organizations, and we'll just take a look. And it's going to change from now, but let's see how they changed. From Bloomberg, and some of these, sorry, the dates got cut off because they're just screenshots, but this is, January 27th. Rate hikes will turn down the housing market heat, RBC. I think RBC was speaking the truth back then. Let's look at who's full of it, and who's speculating, and who's promoting this market, and who's kind of being realistic. So RBC seems like they're pretty fiscally sound in their comments there, which is good to know, right? So here's one from the Toronto Star, January 27th this year. Now it's a race. Economists expect hot spring housing market as buyers scramble to get in before interest rates rise. Buy, the Toronto Star is saying here. So I guess they believe that the market's going to go up, or you should buy now because it's going to cost you more, because the market won't go down. It's just going to cost more money to buy because the interest rates are going to go up. So they're obviously promoting a hot market, which is fine because that's what it was. Here's another one, February 3rd, Financial Post. Banking watchdog warns housing prices could plunge 20% when speculative fever breaks. And this is from the OFC chief, describes the pandemic housing surge as the perfect storm. Can't argue with that. Better Dwelling, I don't know who runs it, but they're kind of on point with the way I feel. And it's not just because I agree with them, but they're putting stuff out there, and it doesn't seem to be hyping up the wrong stuff. It's sound information that they're getting. And again, they're not just writing it all. This is from BMO here. So Canadian real estate resembles 80s bubble. Higher rates to solve supply issue, BMO. So we're not talking about housing crashes. We're talking about put the rates up. That'll solve the supply issue. Well, how's it going to do that, right? Here's another one, Financial Post, February 7th. Canadians deepening their faith in the red-hot housing market, even as rate hikes loom. Optimism about the nation's housing market rose to near record levels last week, poll finds. It's another from the Financial Post. Move over, Vancouver. This is Canada's most expensive housing market now, says RBC. And from Toronto took over the highest price point. Buy in Toronto now instead of Vancouver's overheated housing market. CTV News, I guess it's the beginning of February, the date got cut off, but Kingston, Ontario has the fastest rising home prices in all of Canada, new numbers show. Perfect, go there and spend your money on overpriced houses. You should go there, everyone else is buying them, so you should go buy them in Kingston back in February. The Globe and Mail, February 9th, updated February 10th. Canada's real estate market forecasts a strong spring, supercharged by the bank of mom and dad. So we're going to have a hot spring. February 15th, Yahoo Finance, Canada real estate, housing market breaks 2 price records. It's breaking records, guys. Buy some more homes. Don't miss out, FOMO. Reuters, sounds like Roto-Rooters to me. March 1st, Canada home prices to defy gravity this year. Correction unlikely. This is March 1st. Like, the market was already slowing by then, but these guys are still telling people that it's going to defy gravity. All right, now let's look at the reality of today with today's headlines. So the date got cut off, but it was May 15th. This week's top stories. Canada's real estate bubble to pop in 2022, and Bank of Canada warns debt is a problem. Wow, come on, it's only 184% of household income. Or for every dollar we earn, it's only 184 or 187%, something like that. May 14th, Yahoo Finance. Housing sales get hammered. Should you still buy REITs? Sure. Buy some REITs while the housing market's getting hammered. Another one, May 15th. Bidding war no more. How to make an offer in Canada's cooling housing market. Probably call your realtor and make an offer. And put a low offer if it's cooling. May 14th, another one. Cooling, from the Globe and Mail. Cooling real estate market gives some leverage back to home buyers. Just a little bit. It's probably true, actually, because it hasn't cooled off where you can beat people up too much on prices. It's still pretty competitive. Friday the 13th, Toronto Star. The housing market is cooling. Should you buy now or wait to see if prices drop? Financial Post, May 9th. The way the housing market is stalling, the Bank of Canada may have to hit the brakes sooner than expected. For the first time since 2010, 5-year fixed mortgage rates are all above 4%. Hit the brakes, what are they talking? Put the interest rate, stop doing the interest rate increases, put them back down. That's a tough decision, right? Because if they go too high, it's going to be detrimental or devastating. So but you can't tell because there's a lag time in of course real estate. So yeah, it's a tough job they've got, but I think they've failed up until now, in my opinion. May 6th, brokers seeing less bidding on homes as Canadian sales drop. All right, I guess you have to read to see which brokers. If they're talking real estate brokers or mortgage brokers. And lastly, Canada's real estate bubble won't be protected by population growth. Bank of Montreal. Won't be protected by population growth. So they're saying that supply and demand issue population growth won't help because the bubble is going to pop regardless. Yeah, we'll see. So there you have it. That's my 2 cents for this week. Let me know in the comments what you think. As always, like, subscribe, and share. And thanks for watching. Until next time.